Oh, guys, I'm so sorry. Apologies. I've started this broadcast with the mute button pushed. So very, very sorry, guys. I was just doing a little bit of an overview. Luckily, we're just actually starting. We're going to sort of go through each of these markets one at a time. Apologies for that, guys. I've only just looked at the chat box. So thanks for that, Renko and Matt. So what I was saying is there's not an awful lot of news available due to be released today. We do have some PPI data which is released at 1:30, and that has the potential to have a minor impact on the US dollar, but we're not really seeing an awful lot of movement. And yesterday was a little bit choppy and a little bit turbulent. A number of rejections in the dollar market. So it's in this sort of phase at the moment where it's not giving us like clear-cut direction. So because of that reason, we're kind of inclined to just back off it a little bit. Now it's strengthening against the dollar, as you can see, pulling back off these highs. So it might present some more opportunities for us. You could perceive maybe over the coming days if we get another leg to the downside, or we get a pullback off this high, or we get a pullback off this low for the pound yen. So it is interesting. It could swing both ways on a variety of different markets. So we'll have to keep our options open. There's some markets that are more favorable to the downside if the dollar strengthens. And there's other markets like the dollar Swiss and dollar CAD that could be good candidates for if we start seeing dollar weakness. So we can prepare ourselves for both eventualities, depending on whether the dollar strengthens or weakens. Not really getting any follow through. We tried to trade this market to the downside before 97.32, and that's why it's just very important to make sure you keep those. Yeah, thanks, Matt. We keep those risks and the monetary exposure in these markets to an absolute minimum if we possibly can. And that is that's very, very important, especially in these types of market conditions at the moment. And then when you do capitalize on a big runner, you're able to see significant returns on a trade. We're just not getting that many opportunities in some of these markets just over the last couple of days. So again, we're just erring on the side of caution a little bit. We can look at the gold market in a little bit more detail. We've had a bit of a rejection to the upside, and a little bit of a flush lower. So let's see if we get a kind of a structural failure. So if we get a bit of a bounce higher and then we get this little rollover price action, that might give us a very clean cut, very small entry to get into this market to the downside. So we'll definitely come back to the gold market in a little bit more detail. US oil not really doing nothing, firmly contained inside yesterday's highs and lows. Same situation for Brent. The S&P, it's looking like these markets are interested in kind of squeezing lower. We've got a lot of levels of support just below these levels, very likely to stack up, and some buying likely to come in. So we kind of want to clear those levels to have any significant certainty to the downside. So the US oil market, the Nasdaq is experiencing a double top, a nice strong explosive move to the downside, and we'll see if we get some continuation. The level that would interest us more so would be kind of a confirmed break below the 73.17 level. So a little bit for this market to go maybe before we look to get into it. We tried to sell the FTSE market today as well, and has done effectively nothing all day. So it's just really choppy, sort of sideways moving price action. So unfortunately not an awful lot to see, and not much has happened either in the Euro stocks. Little push lower, really strong reversal, breaking above the weekly low, and then sort of this grinding price action lower again. So bias is to the downside. as in line with the actual trend, but we've had like breaks to the upside now on structural failures, and now we're sort of unwinding that again. So a little bit of a mixed picture really with that market. So the markets we're looking for are not, there's not a really clear, coherent kind of pattern existing in many of these markets. I might have one more look through these to see. I mean, we might see what news is released now in 9 minutes and see if that injects a little bit of volume into these markets, because at the moment they're not really giving us any high probability opportunity. You'd like to see continuation tomorrow above these highs, and to see if you get some nice strong move to the upside. We are below the weekly low, so that's likely to provide resistance just at these higher levels. So we kind of have to bear that in mind as well. So this might be one of these trading sessions where we just kind of keep running through these markets and see which markets give us the kind of the better opportunities. Again, with the Aussie dollar, you'd like to tomorrow sell beneath the lows, and that would be your rejection candlestick. Trading that today doesn't represent necessarily high probability opportunity for us. The New Zealand dollar, same situation. So euro pound, we are trading below this level. We do expect it lower, but we've had a strong rejection off that low already. Consolidation in pound yen. A little bit of buying is sort of coming in, but again, we do have the weekly low, which provides support on the way down and potentially resistance on the way up. So that's something to be mindful of as well. The gold market is kind of extending lower from these levels. We kind of firmly have this kind of structure in here where we've got a low down at the 1185. We've bounced back to the 1187, and let's see which direction this market is intent on moving. We've had a good extension to the downside. Now we're experiencing a pullback off these lows. So we do like this market to the downside. It might present the only real opportunity for the session, unless we start getting some movement in the oil markets. Okay, so we'll come back to this again then just in a couple of minutes. Some weakness might very likely start creeping into these. We have been selling these markets over the last couple of days, but as you can see, at each point you start running into significant resistance, and it's just made it very choppy, very difficult. So maybe just waiting for the higher probability trade to set itself up. Renko, the Aussie dollar will look for longs today, targeting the 71.50, and you're currently long from 71.02. So we've had a bit of a turnaround in the Aussie dollar. So we're currently at the 17.94. Okay, so you got in basically on the pullback, probably too close to the daily high, yesterday's daily high. The only problem is, at that point there, you're talking about a 60, maybe 70% reversal off the highs, which if we look at this on a smaller time frame, it means a number of structural failures. Well, actually only 2 of them. So if this is our high, so we've had the market pushing upwards, we've created a low, we've bounced back, and we've extended this market further to the downside, creating a low again. Structural failure number 2, with the expectation to push lower. And then we've had a little bit of a W formation in here, and prices have just bounced off it. So that's a lower high. So in here, so we do need to sort of break below the 70.88 level, and that would signify unfortunately potentially a losing trade as far as a buy trade is concerned. Now the only thing that would be potentially worth holding on to was if we actually broke above the 71.05 level. That would be quite interesting, because that would represent a really strong structural failure to the upside at that point. So if we started to see this move, then I would certainly be a lot more comfortable with potential. So that would be a strong structural failure over a significant period of time to the upside, and might add some more strength. So the problem we have from very early this morning is a complete devaluation in this market. And are we likely to get continuation? You'd probably have to say the likeliest outcome is this market to move lower. And I suppose the daily time frame is a good snapshot of that, because we've extended to the upside and we've retraced now probably 70% of that move. So, and it's looking bearish now. So I suppose one of the rules we look to apply when we trade is look to try to trade in the direction of the market. And what we mean by that is, if you see this market, any of these markets just in here, have a directional bias and look to sell those markets. So don't look for buy trades. There's a lot of traders there that will look to buy the lows. It's much more difficult. It's perhaps a little bit easier when you're a lot more experienced and navigating, and you can take, you can be a lot more disciplined with your capital. But look, as a minimum, look for opportunities to trade in the direction of the market, and that's potentially to the upside. So you can either decide to buy these pullback, which is the counter trend move, or you could stay out. So you could always there's 3 things you can do if you want to, with any particular market, and that's either look to buy it, look to sell it, or look to do nothing. And sometimes we would look to do nothing, just depending on certain situations. But certainly we could look to sell on many of these occasions, and we're going in line with the market, so we're wanting the market to move with us. So as a general rule, it does normally work quite well. Now, I suppose trading conditions since early September have been particularly sort of tough, and we got 3 or 4 good days of back-to-back sort of momentum-driven markets, which makes sort of trading opportunities a little bit easier. But like, this wouldn't give me any confidence that this market is going to be pushing up to the 71.50. That would certainly be my opinion. So it is a tough one, Renko, and I suppose the beauty of the financial markets is that there's 100 ways to trade these financial markets, and it's finding, I suppose, a methodology and approach that's very suitable to you with the amount of capital you have, and also the amount of time you have available as well. So this is definitely rolling over to the downside, so we'd actually more have a bias to the downside than we would to the upside. Let's flick across to the euro dollar and just see if this news, so there's a bit of dollar strength creeping in now, so a nice little move there. Let's get up the Forex factory. So this could be a 0.2 or maybe 0.3, a little bit of a positive news event for the PPI number. It looks like it's, yeah, so it's come in exactly as expected, so that allows the dollar to strengthen accordingly. So we're getting this move lower. Does it give us an opportunity on a intraday or on a daily time frame? Not really. It's really not giving us much to work with as things currently stand. I suppose a little structural failure here to the downside. We do have the 1500 providing. This could be actually a trade potentially worth taking. So we've bounced off this level in here. So we're going to look to take this trade. Actually, I want to make sure I don't want to make this mistake again. Let's sell this market at this price, and we have a relatively small stop loss again. So just above this high in here. So we're talking about a 16 pip stop loss. 15 is normally our average, certainly in these market conditions. So we're sort of coming in terms of average exposure. We're keeping our we do have the potential to trade at larger trade size than 0.1. I suppose we just mutually agree to for now anyway, during these sort of difficult market conditions, to just keep the trade size a little bit lower than perhaps normal. We can certainly look to increase that trade size under different conditions. And what we would like in this market now is obviously a thrust lower, and then we're probably going to get a bit of a pullback. And what you want to see is this market continuing to sort of move down to these levels. So at which point we can mitigate risk, take risk off the table there, and bring our stop loss right down. So that's what we're looking to see, if we can see that in this market. Hi Lewis, I hope you're feeling better today. Yes, I am. I was feeling very, very ill yesterday. Unfortunately, I've got 3 lovely little kids, and 2 of them are savagely sick at the moment, and I've clearly picked up something yesterday. Really wasn't feeling that great, but much better today. Thank you very much. So you got a quick question. If you know the levels of trading, entry and stop loss, how is it the trade room doesn't practice pending orders? Yeah, set and forget. Yeah, I mean, we do use pending orders in our capital growth webinar. I don't know if you're able to join us for that, Lewis, but we trade daily time frames. They're a lot more stable, obviously much bigger time frames. So we look to capitalize on some major market moves at 9 p.m. every evening for about 30 minutes. We place pending orders in the markets, normally in and around significant levels that provide us with a strong signal and level to get into those markets. And yes, we can actually place pending orders, except I suppose we prefer to, if we're trading intraday time frames and we're getting in and out of the minute time frame, and we're taking on board multi time frame analysis, we can make those decisions in a live trading environment. Now, you're absolutely right in some respect, where if you place a pending order, you can set and forget, and that's absolutely a viable means in which to trade these markets. Look for consolidation, look for those breakout levels, place your pending orders and set and forget. What you would probably need to do is to have a slightly larger exposure, and what we're looking to do as well, and we've got some interesting announcements that we'll be making, that we've been working very hard on over the last month or two, really. So hopefully we'll be I suppose we'll be able to answer your question in a lot more detail, but it really just boils down to the type of approach that you would like to adopt. There is many ways to trade these markets successfully. This current approach is very much sort of trend related, looking to trade the trend. where we can look to get into these markets and look to let them run. But if that doesn't happen, you obviously get stopped out, and we're keeping those stop losses very, very small at the moment. So we're very comfortable with that. But and then when we get a winning trade, we see a significant multiple of our risk exposure when we get it right. No doubt about it, market conditions have been quite choppy, so it doesn't necessarily guarantee any additional success by using pending orders. But really, we're just spending the time for a couple of hours during the open of each session. And normally, those are the most volatile periods. Those are normally when the traders get to their trading desks and they look to make their decisions, place their trades. And you often see significant volatility around these periods. Now, we've all noticed, certainly for the last number of weeks, that the volatility seems to increase as the trading session unfolds, and but that's largely very, very unusual. So it very much is a phase. So you're getting these slow grinding price action during maybe the first couple of hours, and then at some point later on in the evening or in the latter part of the trading session, you seem to be getting a significant number of kind of reversals, and those are just the market conditions. So that's why we reduce our size and we reduce our monetary exposure in these trades. So it's just a more dynamic form of, to answer your question, Lewis, it's just a more dynamic form of trading where you're trading the signals, you're trading the markets in a live environment, and as a result, the need for pending orders is not that great. And certainly one of the things we look for is a bit of a close before the level, and with a pending order you could just get a little spike above it and no follow through. So we'd want to see, that we get a close above that level before we get into it to the upside, and it can protect your capital as well. So I hope I've attempted to answer your question anyway. I mean, there is some situations, and you get some sort of markets where you can set and forget. Certainly, if you are in a major bull trend, or like if you get the price of the gold market, exploding to the upside day after day after day, and you look to get into them, by all means, get into them on multiple occasions. Place your pending orders, and if you're seeing structural highs after structural highs, situations like that, or even if the oil market starts to fall over to the downside, maybe you could adopt an approach like that as well. That will just allow you to get into it on multiple times. So yeah, I hope that answers your question in kind of probably more of a roundabout way. But to answer your question, in terms of our capital growth webinar every evening, we do use pending orders on much bigger time frames, just because they're a little bit more dependable than using them during smaller time frame trading, intraday trading sessions. Definitely, yeah. In any case, it's nice to spend time here following your ideas. Yeah, that's exactly it. What we've been, I suppose, able to do, I guess, is make sure we minimize our losses when we take losing trades. Obviously, losing is a fundamental part of trading these markets. It's not possible to make money without taking losses. And as a result, you can go through relatively frustrating periods. Now, April to June for us was very volatile, very positive on an intraday basis. We were getting move after move and really nice, strong, directional flowing markets, and actually trading was a lot easier We're just going through a little period right now where there's a little bit of I suppose fear and anxiety in some of these markets, and if anything, what you'll hopefully learn is to have a disciplined approach to your capital. Don't take 10, 20, 30% losses, which some traders do. There's no real need for that. Work out a small 1 or 2% risk on your trade and look to trade that kind of volume. And for our traders over at the LiveTradeRoom, we get access to our risk management software, so very easily you're allowed to work out exactly what exposure you have to these markets, and that's all part and parcel of a trader's toolkit to being successful when they trade. So could definitely do with a day where we get into 2 or 3 trades and we just get some follow through, because that's the trading environment in which certainly this approach here, which we're trying to deliver in a consistent manner, that's when it starts to pay, when you start getting trending markets. So we're definitely due a number of back-to-back winning trades, and then you'll see the impact that has on your trading account. Except at the moment we're probably taking, in terms of number of losses, we're taking more losses than we are winners. But often it could one winner would retrace the losses of maybe 5 or 6 trades of ours. So that's really getting that risk reward ratio the right way around is really quite important. So we can stick with the euro dollar to the downside. And I suppose, just following on from what you're saying, Lewis, trading probably should be viewed by traders as effectively a skill for life, something that you can learn and sort of benefit from for over the longer term. But it's not as easy as some educators would make you believe. They might have a silver bullet that can allow you to make loads of money trading these financial markets, and the reality of it is it's a lot more difficult than that. So you've heard from professional traders that they have struggled to make any money in the last 2 months. Yeah, you're not alone there, Lewis. We too have been speaking to other traders, and we trade our own capital as well. And it's definitely a little bit more challenging right now. I suppose there's a little bit of fear and anxiety. There is lighter volumes. There is probably a little bit more manipulation. There is, I suppose, a lack of follow-through in many markets, and certainly the lack of volatility during the first couple of hours of every session is a little bit on the unusual side. So depending who you speak to, it is definitely a little bit more difficult right now, that's for sure. We definitely have loads of much easier market conditions from time to time. That's much easier to make money. But hopefully, if you can keep your risk low during these market conditions, you'll see how you can make money when the market conditions improve. But yeah, that's generally a lot of the feedback that we've had from speaking to a number of kind of associates of ours and friends who are traders as well. You see, looking at the S&P 500, we've had this market just sort of squeeze lower. We've had a little bit of a bounce off this low in here at the 28.70 level. Yesterday we had a rejection of this level. Let's see how price behaves around that level now. Do we get that little move lower? This screen is full of structural failures to the upside, followed by structural failures to the downside, makes new lows, and then structural failures back to the upside, multiple structural failures even higher, and then structural failures back to the downside, back to the upside. So I suppose it's more prone for scalpers rather than trend traders. I suppose it is important to know what type of trader you are and what your approach is to risk management and risk reward. You know, do you risk 15 pips in order to generate 3 or 4 pips? If that's the case, our success rate would probably be something like 90-odd%. But then, you know, every losing trade that you take, you know, you'd have to sort of see 5 or 6 profitable trades. So it really does depend on your approach and how you knowing the pros and cons of your trading style, and trying to navigate within that. And it will certainly be interesting to see end of year performance as far as your hedge funds and your financial institutions. It'd be interesting to see how they do on the trading front. So we do get annual sort of reports on that every year, and we'll certainly share those details with you. When we get them through. So definitely been easier trading years, but you know what, if that allows you to fine-tune your risk management approach, then it could be viewed as a very, very useful learning curve. If you avoid taking big losses on your capital, you'll be able to make money trading these markets, but most people can't avoid taking big losses. So therefore they're always going to be up against it. Even if they have big winners, they're always going to be prone to big losses again. And I can't tell you how important that is to avoid. You know, if you're risking 1% per trade, and in terms of your capital exposure, and you take 10 losing trades, you know, okay, that would be obviously 10% of your capital. But it wouldn't be beyond the realms of possibility for any one of those trades to be a 7, 8, 9, 10% return on your risk for that trade. So it's just having a positive risk reward so that you get paid when you get it right. And just take those choppy, volatile conditions into account when you trade these markets, and if you can learn that and like I said, avoid taking those big risks and taking big losses on your trading account, then you're more likely to be able to make consistent returns. But definitely I'd have to agree, we've definitely had easier trading years, that is for sure, absolutely. And we've had a relatively successful first 6 months. It's just the summer, and certainly last month. After the FOMC, we had some really good, strong directional trades. And now the market seemed to have jammed up a little bit again. So we're ebbing and flowing, I guess, would be the phrase. It's really not a huge amount of action, I don't think. The pound potentially strengthening again. The dollar strengthening against the yen, but maybe tomorrow that might provide us with a much better opportunity. Dollar Swiss, dollar CAD. So dollar strengthening against the CAD. Potential downside. The dollar strengthening against the Aussie and the New Zealand. Nothing against in the euro, pound. Bit of pound strength. So I suppose there's a bit of selling creeping into the yen markets, but we do have the weekly lows just above these highs. So again, from a consistency perspective, so this is interesting. So we're getting this so we do get a break lower followed by pretty instant reversal off those lows. No real movement in the oil markets. The S&P is threatening to squeeze below these levels. Might just take that level just in there, just below these current levels. The 28.69 could be the next level to the downside. The Dow Jones potentially looking like it's going to squeeze lower. So we do have the Nasdaq just threatening to push lower. We are actually below the weekly low, which is 73. In fact, this weekly level is just a little bit lower actually, just at these levels here, the 73.24 level. So that's the level that we're currently at. So let's see if we get to break yesterday's low, which is 73.14. Let's see if we get that market squeezing lower there. So I'm just flicking through these markets. So there's definitely a little bit of sort of dollar strength in some of these markets. I'm currently pulling back. Let's have a look at this on a 1 minute time frame. So it's a structural failure to the upside. We're now actually above the 1500, so that was one of the reasons why we're interested in getting into this, because we've got a structural failure to the downside below the 1495, and we knew we had some resistance around this level, and then we had our stop loss above this high in here. So you're actually wanting this market to work quite hard to stop you out, but it's looking like that's what it's absolutely prepared to do. So we'll see how we get on with this market. We still like the potential for this market to squeeze lower, but it just depends whether this whether we're getting these this strength coming back into the US dollar or not. So we don't really want to be in this market above the 1505 if we do get this price breaking above it. We can see the gold market is reversing now. Structural failure to the upside. So a little while ago there was a little bit of dollar strength creeping in, and now it seems like there's dollar weakness coming into these markets. So what we need to see happen is this market just failed to break above that 1505. So as long as we're trading below it, we've still got every opportunity to remain in this trade. I'm just conscious of the time, guys, so we're going to switch across to the live trade room now, and we'll finish the trading session. Let's see if we get a bit of selling coming in off these highs. Okay, so we're going to conclude this trading session through our YouTube channel now, and just switch over to our traders at the live trade room. So hopefully you can join us for that. We're still currently offering a 14-day free trial, so if you'd like to join us completely free of charge for 14 days and get access to over 76 live trade rooms per month, then do take us up on the 14-day free trial. And at the end of that, if you want to continue your membership with us, then there is only a minimal fee of $9.99 per calendar month, so nothing more. So hopefully that's very affordable for you and not too expensive to learn how to trade these financial markets. So so thanks very much. Yeah, thanks Renko. Yeah, probably luck is exactly what's probably needed. A little sprinkle of kind of activity and a bit of movement and a bit of volume and stuff would be nice, but I suppose you have trading sessions like this sometimes, and other times it's easier to make a little bit of money quicker than other occasions. So we have to take the market conditions into account when we trade, and this is a good market and represents that kind of outcome, really, I guess. So thanks very much for that. So do feel free to connect to us. Do give us a thumbs up if you can for this video, and subscribe to our channel if you've not already done so, and click the bell function if you'd like to be notified when we go live, and also connect with us through our Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen. So thank you very much for joining us. Do take care. We're going to switch across now, and do read the details below if you would like to join us, and we'll be happy to see you through the live trade room. So for everyone here, take care and we'll speak to you soon. Bye for now.